Good evening. Welcome to the earnings review, your tidbits into company financials and operational insights. I'm Ibn Mabunda. Thank you for joining us as we broadcast from our Hampton studios in Harare in Zimbabwe. On the show, we engage top echelon executives to get you up to speed with first-hand information. We also chat with competent analysts on the market just to ensure you're furnished with comprehensive as well as relevant analysis. On the show today, we look at Padenga, a listed exporter on the Zimbabwe Stock Exchange. Now, here is a sneak peek into what Padenga is all about. Padenga Holdings Limited is the leading supplier of crocodile skins and meat in Zimbabwe and exports to the East as well as to the European markets. Padenga accounts for nearly 85% of the world's supply of Nile crocodiles, which are used in the production of high-end luxury fashion products. The company operates 3 crocodile farms in Zimbabwe with a total capacity of producing over 50,000 hatchlings. Padenga also produces Nile alligators in the United States of America, particularly in Texas. Of note is the fact that Padenga was established in 1965. That means to say they opened their very first farm then and have progressed ever since and now boast of over 50 years of experience in that particular field. Disbanded from INSCO in 2010, the entity was listed on the Zimbabwe Stock Exchange that very year. And of particular interest at this moment is the fact that Padenga is involved in the acquisition of a 50.1% stake in Dalaglio Investments, an entity which is involved in the exportation of gold material to the rest of the world. And now this, of course, would be that signal for us to cross over into how the entity has performed over the past year. And now I'll be joined by the Group Chief Finance Officer, Mr. Oliver Kamundimu. There are certain key changes that have taken place in your sector, particularly where the review of international standards for your crocodilian skins in that regard, which have, of course, seen an increase with regards to what you have had to spend to meet those international standards. Just in a nutshell, would you want to take us through some of the key highlights from your 2019 results?
All right. Thank you, Ibn. 2019, as you can see, most of our indicators, financial indicators, are down. 2 major reasons there. We sold less than we had anticipated to sell. We sold roughly on the crocodile side of things 42,000 odd skins compared to a budget of 46,000 skins. And then on the alligator side, although we sold a fair number of skins, the prices there were very low because of poor quality skins that we had carried forward from the previous years. That's the major reason. And secondly, we chose to report our numbers in US dollars. And as you may be aware, in previous years, we would mix RTGS balances and US dollar balances, and because of the legislation in place, we would then call everything dollars. But now what we have tried to do in 2019 is to say, right, let's be very strict about what we are doing. Let's follow through and make sure that what we are calling US dollar numbers are actual US dollar numbers and numbers that have been converted at the correct rates if they are local dollar numbers that are being converted into Zim dollars. So much as things are looking like they've gone down quite a bit, it's also a case of the transition period that we are in, where in the previous years, things looked quite rosy, but not everything that we were calling dollars were actually dollars then.
Fair enough. To get into your crocodile operations, which are pretty much your flagship and a significant contributor, and as far as revenue is concerned, over the years you've fed between north of 88% and about 94%. What is the outlook in terms of distribution to the export market, given the disruptions to your distribution network brought about by the COVID-19 conditions across the globe?
Yes, we did face hurdles when the virus struck, and most of our goods going into Europe were airlifted, were air freighted into Europe because of the huge demand for the premium skins. And when all the major airports closed down, we did face a challenge in getting our product across, but we have worked a way around that. Now we are sending our product by sea freight, and that will get there without any major hassles.
Oh, quite a great way of navigating the difficulties there. And now at this point, we're talking about an ICFA certification, which helps you be viewed by the global standards in terms of the quality that you produce, the only one in Africa. How far will the molecular lab and facility enhance your compliance with ensuring that you meet international standards?
That lab will go a long way in making sure that we understand the whole structure of the skin and the diseases that can affect the skin, the damage it does, and how quickly it can be repaired if anything is damaged. So it's helping us quite a lot in terms of enhancing our quality. And the ICFA certification that you mentioned first really is about our social license, our proven fact that we are producing our animals in humane possible way, in as humane a way as possible, and we are not harming the economy and all those, and we have come out in compliance of the best practice for farming, for livestock farming in all aspects.
Still talking about standards, Oliver, what is the impact of the change in standards with regards to your operating costs, particularly for the crocodiles?
There are some costs that we've had to incur in order to meet the required standards. We have invested in that lab, for example, where we are doing research. We are investing in a water treatment plant that's going to cost us $6 million over 4 years to make sure that the water we put in back in the lake is of the highest quality. And all those things add to our costs. We've employed a few more people than we used to have on the farms in order to meet the new production methods and to make sure that we enhancing the quality. And
Okay.
but that all that is not lost. We believe that once we nail the quality, we should be able to command a higher price that's going to offset all those costs. And if we get the quantity and the quality right, our operating costs as a percentage of sales will actually go down. We will have a better EBITDA margin than we are having at the moment. Albeit that margin will be an increased cost, but we expecting the increase in turnover to offset that increase in costs.
Phenomenal. Maybe as a follow-up to the quality drive, trends show that in terms of the quality that you've produced over the past 5 years, there's been a gradual decline. In 2015, we had quality produced of about 96%, which has narrowed 95, 89, 89 to 81% in 2019 over the past 5 years, respectively. What would be your comment with that is concerned, given the fact that you have just gotten that ICFA certification?
Right, the standards have been moving. That's a fact. What used to be a first grade in 10 years ago is no longer considered a first grade in some aspects. If skin had no major defects and had some pinpricks damage from, say, past pox disease, that used to qualify as a first. But now they're looking at all those things, and if it just shows a shadow of a former problem, then it's no longer classified as a first. It's all to do with the amount of skins on offer and the demand that there is. As there's more and more farmers coming online, the standards get more and more stringent. So much as our skins were once affected by a condition called double scaling and a pigs problem that are like little pinpricks, we've gotten over all those problems now through the research that we've done and the intellectual property we've built over the years. But that doesn't mean we'll go back to 96%. That is not likely to happen in the future because of the changed stringent levels at grading. This is also coming from the end customers, where our customers sell to. The tolerances they have increased. So we are upping our game to make sure that we meet our customers' needs. But yeah, we will not go back there. To get an 80% in the current grading environment is actually a big achievement.
Interesting. Thank you for shedding light there. Now, 50% of your CapEx, which is your capital expenditure, went towards that solar plant, which according to the trading update, you expect to be commissioned by the 31st of May. How much of an impact will this be in terms of your operations?
Right. When fully operational on the two farms that are on the Kariba side, we will produce 50% of our power needs from that plant. So we used to pay traditionally, maybe now with the new cost of electricity, $500,000 a year, US dollars for electricity. We probably would cut that by 50% with if we are fully functional on that solar plant.
That would be $250,000 US dollars.
Yes.
Are you on track in terms of meeting that 31st target?
There's been some slight delays, mainly in terms of the regulatory authorities coming to check our setup. This COVID shutdown meant that people couldn't travel to Kariba to assess what we've done before they switch on. We have done what we need to do on our side, but for the regulators to come in and check what we've done, we're trying to now convince them to come up. They are not too sure whether it's safe to come up to Kariba at the moment, given that they would have to stay in hotels and what has happened in hotels elsewhere. So we are likely to see the commissioning happening a bit later than anticipated.
Fair enough. And Oliver, what has been the impact of COVID-19 in terms of your cash flows?
Right. Our cash flow has been affected in two ways. We saw a delay in getting our product to the market. So that means our receipts will also be delayed. But we are in negotiation with our customers whom we have been supplying for a long time to make sure that they advance us money before we actually deliver product. And those negotiations are ongoing. And then secondly, we've had to build up on our raw materials, the feed ingredients mainly, because this whole COVID thing has caused some upsets in our source markets for the feed ingredients. We use things like meat and bone meal and porcine meal, which is a byproduct of pork processing. And some of the pork plants in Europe and America have been closed for the past 3 or 4 weeks. So that's going to cause a major disruption in the supply of those protein feed ingredients on the whole feed market. So in order to get around that, we have been buying what we can buy so that we build up stock on the farms of maybe 3-4 months stock, where we would normally keep 2 months stock on farm. So what that will do is it will tie up all our money into working capital, into feedstocks. And at the same time, that's happening when our inflows may also be disrupted because of getting product into the market late. But we are working through that, and so far we are succeeding.
Interesting. Now let's talk about your acquisition, or should I say the approval by your shareholders to get a 50.1% stake in Dalagle Investments, which is a gold producing entity. At the point that you're coming in, the investment, the 20 million investment that you set to fork out is earmarked for a Eureka project. And in your most recent trading update, you did allude to the fact that there has been a delay in terms of the conclusion of that particular acquisition. What is the update, and when do you expect to have concluded that very acquisition?
Okay, there's just one regulatory approval that we are awaiting. Everything else is done. There's agreement on everything with the between the two parties, and the development is ongoing. The Eureka mine is being developed as we speak, but that approval we were expecting to get by end of March, but it didn't happen. End of March, early April, again, because the people who give that approval, their offices were closed because of the COVID-19. So we're expecting that as things open up now, we don't anticipate any problem with that approval because we've done all the preparatory work and we've submitted all the information required. We don't see a problem there. It should come as a matter of routine.
Okay, now, if you remember the last time that we met Oliver at that shareholders approval meeting, you did highlight that once this acquisition sails through, you expect, particularly through the Eureka operation, that you'd get 50% return on investment, so to say, if my memory serves me right. Would you still be on target in meeting your 31st December deadline in terms of getting that mine back into operability?
Yeah, there's also been there would be some delays, obviously, in acquiring all the materials because of this COVID thing and the congestion happening in all the ports around the world. We're still targeting end of December 20, but it might spill into first quarter of 2021 because of COVID-induced delays.
Fair enough. Padenga has been clear about one thing, which is targeting the export market. Now, with interests of getting into agriculture, particularly the macadamia plant as well as the avocado, what hectarage are you looking at first? And secondly, which areas are you looking at, or which regions in as far as the agriculture divisions of the country are concerned?
We are actually probably going to do this project in Mashonaland West. We have done the groundwork and which
would be a region 2.
Yes, in region 2, definitely. That's where we are going to do the project. We haven't finalized on the hectareage yet because we are still to finalize on exactly where we'll do it in terms of which area, also which farms in particular that we will acquire to do the project on. But we have identified the general area where we would like to work, and we've identified the banks of land there that we could utilize. So we are at a position where we would, once all the due process is done, go for the acquisition of the actual land.
Fair enough. Now to cross over to your USA operations through the Tallow Creek Ranch. I do understand that you have received some amount from the White House PPP stimulus funding. How much has that assisted in terms of cushioning your operations against the harsh conditions brought about by COVID-19?
That what came through, I think we pay our wages for 2 months. So that helps a lot. Every cent helps in that operation. as you are aware, it has had its fair share of problems. And when someone picks up your wage bill for 2 months, then that's good.
Fair enough. And in your Q1 trading update, you indicated that you have resumed your shipments to the east, and you have actually shipped about 8 tons to Hong Kong. And of course, that was in as far as March was concerned. Now we are in the month of May. What has been the progress? Have there been any shifts? And which direction from where you are sitting could things take in that particular regard?
It's too early to tell. We're talking about meat now, right?
Affirmative.
Yes, we are still to see where the growth will be, because most restaurants in Europe are still closed, and probably as they open up now, going into their summer, and as more and more activities are allowed, we will then assess. But after that shipment, I don't think we've shipped anything else so far. Well, our shipments anyway normally pick up during the summer months. That's when our buyers really see how the product is moving and place more orders for the second half of the year.
Okay. Now, of course, it's COVID. What then become your targets in terms of your crocodile production as well as your alligator production getting into the rest of 2020, perhaps the full year target or anticipations in that regard?
Right. Not everything has been doom and gloom with COVID. When one of our end users opened their shops in China after the lockdowns and everything else, they actually recorded record sales in a day, because there were people who had been waiting for the 5 weeks or however long they had been closed to buy product. So that was quite encouraging. And the products we sell, the end users of our product normally have a waiting period of a year or two of customers actually waiting to get the product. So we are not anticipating a disruption in our volumes, especially on the crocodile side of things. And we are hoping to actually sell more in volume than we did last year. Last year we did the 42,000 odd. I'm expecting us to sell closer to the 48,000 skins this year.
That's more than 100%.
Yeah, we would go more than we sold last year, yes.
But perhaps just before we go, what is your view with regards to the stimulus package that has been announced by government in as far as Zimbabwe is concerned?
I think that was a very positive move by government, and that whole package was spread in such a way that it's helping the vulnerable sectors of society. A big chunk of it went to agriculture, which is where the biggest part of our population is involved. And then we got the 3.5 billion that is working capital support for industry. That's quite critical for industry, which has lost 1.5 months of income to get back on their feet. I think it's quite a positive move. I think they should probably look for more funders to bring in, especially for the working capital support. And if they could even try and extend some of these loans in foreign currency for the net importers and for those people who are developing their production capacity, so that everyone increases their production capacity rapidly, so that we can become a net exporter of things at some point. That would be great for this country.
Has anything trickled down to Padenga yet from government?
I am knocking on my banker's doors every day. They are telling me that the funds have come through, but believe me, I'm here in Harare today looking for those funds.
Okay, fair enough. Well, Oliver, thank you so much for making time to talk to us and for giving us an update on how Padenga is doing. It's always a pleasure. Thank you so much. Much appreciated.
You're most welcome, Eben, and thanks to the Equity Access team.
Welcome back, viewers. That was Oliver Kamundimu, the Group Chief Finance Officer, who of course took us through the highlights of how the entity has performed over the past year, and also looking into the outlook of that very entity. And now joining me to review the results is our in-house analyst, Respect Kwenzi. Respect, thank you for joining us, and of course, welcome to the show.
Sure, thank you. It's always my pleasure, Eben.
Beautiful. Now let's get into the financials, just to look at how the entity has performed over the past few years, dating back to 2014, right up until 2015. Right at the top there would be their revenue line, and in the white there would be their profit after tax position. And looking at their revenues, they have pretty much increased from 2014, where they produced $28 million, up to 2016, $31 million, dipping in 2017 before taking that jump there in 2018. And now we see a 22% decline to a revenue figure of 29 million United States dollars. And then of course their profit after tax, which has pretty much been in an upward trajectory from 2014 right up until 2017, before taking a dip in 2018. And now of course we're at 2019, where we've got a figure of 6.7 billion United States dollars. What do these figures actually mean? Take us through, Respect.
Sure. So it has been quite a journey for Padenga since its listing in 2010. But as you have well noted, there's been an increase in successive periods in revenue over the past 10 years. But now getting into 2019, the dynamics has slightly shifted. But I think what's particularly important is to note that the top line growth has been affected by the need to go in line with global standards. So as the standards have been tweaked in terms of the quality and in terms of other things that they have to do within their operations, it has affected their entry or their sustained markets, especially in Europe. So this has actually dented their top line growth. In fact, about 85% of their income comes from crocodile exports. And so now the markets, especially the European market, has changed standards over the past few years. So the company has been trying as much as it can to bring to pace or to bring up its operations to speed in terms of the required standards, so as to get back into those markets. And also in the 2018, late into 2018, which means this affected operations, or in fact it affected the produce from 2019 onwards. There's a disease that affected the quality of the produce. So all this militated against top line growth. So we are seeing these stringent standards capping what they could actually earn in those foreign markets. And I'm sure, as Oliver has actually highlighted, they have been trying so hard in terms of trying to put in more capex to impact that top line and to restore those markets. And they have done really tremendously in terms of bringing their operations up to pace with those required standards. But also looking at the bottom line, this is almost a 5-year low. They've last recorded such PAT levels is way back in 2017, in 2015. But this implies that there has been a gradual growth in costs. And so when costs go up, your margins are actually affected and your profitability is also affected. So they are trading at that low level in 5 years.
I realize. Now, of course, you did mention some of their production. This, of course, would be their figures in terms of what they actually produce. And right at the bottom, there would be their 12-month yearlings. Then the second category, there would be their rearings that have run for 24 months. And of course, at the top, there would be 36 months. And right at the top is what it is that they're actually pushing out. But in terms of the quality of what they produce, how significant is this ICFA certification that they achieved over the past year?
Actually, it means that they are able to re-enter some markets which they could not operate in the past years, because they market their product quite widely, especially in Europe and of course in Asia as well. But the European market had become quite stringent in terms of the standard. So to get that certification, it actually means you can now restore part of the demand from the global market that you had lost when the standards were changed. So I think this really speaks to the company's ability to maintain or to compete in that global space, which has become even more tighter. But I think if you're looking at the 2018 numbers, they're sitting at almost mature, I mean the production numbers. That's from the Zimbabwe side of business, which is mainly the crocodile operations. I mean, having about 12,000 crocodiles is mature on the mature segment. It speaks to the ability or their ability to actually sell those stocks or to deplete them in successive years. But this is around the same time where we're seeing stringent or tighter measures being put in place by these European guys. So I think the growth in terms of the mature produce, in terms of their stocks, it actually speaks to their inability as well to have sold in that year. But they've been unwinding that stock as they went into the 2019 financial year. But the challenges are still there in terms of profitability and also in terms of pushing or restoring that top line growth, as we have noted that they're now sitting at about 29 million, which is almost close to the 2015 levels.
I realize, but just very quickly, just before we wrap this thing up, looking at the fact that this company is earning its revenue in foreign currency, how important is that from an investor perspective?
I think it's quite important and it's quite paramount, especially for investors on the Zimbabwe Stock Exchange who are looking for value. I think getting into companies like Padenga and some of the exporting businesses, it cushions them from the inherent currency risk, which is quite significant on the local market. So investors have really been shoring up their investments into similar counters, and also in Padenga as well. So I think it's one of those counters which offers diversification, and investors have surely been shoring up. But I think it's also important for us to quite highlight how the global dynamics around demand for their skin has changed, especially in light of COVID. If you realize most of the big players on the demand side, they are European players. We are talking of Prada, we are talking of Gucci, we are talking of all those guys. They are highly centralized in the areas that were highly affected by COVID. We are talking of France, we are talking of Italy and similar countries. And these countries, they have had a longer period under lockdown, and actually they're still finding it hard to come back. In fact, when you look at Italy, it's forecasted that their GDP growth for this year will be anything close to minus 15%. And IMF has said they will even take longer to come back in terms of economic rebound. So what this implies is that we might see a tightening on the demand side on the global market, and this obviously affects an already strained Padenga, which is finding it hard to cope with these changes in terms of standards and so forth. So I think the situation is likely to get even more tighter, and it puts pressure especially on the cash flow side. Why? Because they are also required to invest as much. And if you are investing a capex of 5 million, whereas your EBITDA is just about 7 million, it simply means there might be an operational strain of sort going forward. So I think the sooner these markets begin to open up, the sooner it is for Padenga to rebound. But all these dynamics, I think they'll also play into how government will also aid local companies in terms of cushioning them. So I think as Oliver highlighted, that in states they've actually gotten a bailout in their operation in states, and they've been able to cover 2.5 months of salaries for their employees, and they obviously got something on the operational side. So I think all these dynamics will actually feed into how Padenga rebounds. But the gold mine acquisition, I think that Delaglio stake might change fortunes in the mid to long term, depending on how gold prices emerge. But currently they are at multi-year highs, and that's a good thing. So the sooner they get in there, the better it is, or the higher the chances for them to rebound. But of course, they've also highlighted that this investment again is strained by their inability to come in quick, and the COVID crisis coming to play, and so they will find delays in terms of how they implement that investment.
Well, thank you, Respect, for the perspectives. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website, www.equityaccess.net. From the Equity Access team and I, Danke, and ciao.